Hello everyone, and welcome back to another SUI market update. At the moment, the SUI chart remains relatively quiet, which isn't particularly surprising given the time of year. Liquidity is thin, volatility is compressed, and the market is largely in a waiting phase. That said, structurally, there are still some important developments worth discussing. Right now, the broader thesis remains unchanged. We continue to track what appears to be an ABC corrective structure, with price potentially working its way higher in the C wave to the upside. Ideally, what we would like to see is a clear 5-wave sequence forming within that C wave. That would help confirm the structure and provide a stronger technical foundation for any short-term bullish continuation. However, it's important to be very clear about expectations. Even if price moves higher from here, this upside should still be viewed as corrective in nature. Most likely, any rally would represent part of a wave for correction, which is by definition a counter-trend move. Fourth waves are not impulsive trends. They are pauses within a larger bearish structure. If this upside move ultimately unfolds as a 3-wave pattern rather than 5 waves, then once the C wave completes, we should expect renewed downside pressure. In that scenario, a final 5th wave to the downside would remain likely, potentially targeting the $1 region. We've discussed these support levels extensively in previous updates, but to recap, the primary structural support sits roughly between 90 cents and $1.08. With an additional key level around $1.30, these are not Fibonacci targets, but structural demand zones that have historically mattered. Focusing back on the short-term picture, we are still tracking the same ABC structure to the upside, with the C wave ideally subdividing into 5 waves. Within the current pullback, which could be setting the stage for the 3rd wave of that C wave, the key level to watch remains unchanged. That critical micro support zone lies between $1.36 and $1.42. As long as price holds above this region, short-term upside momentum remains intact. This zone needs to act as a floor if bulls want to maintain control in the near term. What I would really like to see next is a clear impulsive push higher, ideally strong enough to break above the recent double top structure. That includes both the B wave high and the previous wave 1 top. From a price perspective, that breakout zone sits roughly between $1.49 and $1.50. A clean break and hold above that area would significantly improve the short-term outlook from a structural standpoint. The corrective setup already looks technically complete. We have a clear wave, a B wave, and even a clean 5-wave decline within wave C of the pullback. Price has already reacted to the 50% Fibonacci retracement, when we even printed a marginally lower low below the A wave. That is more than sufficient to satisfy the requirements for a completed ABC correction. In other words, the chart is prepared. The structure is in place. The only remaining question is whether the bulls will actually step in. Volume is still limited, and with the year coming to a close, participation may remain muted. That said, the opportunity is there. The probabilities still favor at least a short-term upside attempt. One important invalidation level to keep in mind, below $1.36. Probabilities for the C-wave rally decrease significantly. That level aligns with the 78.6% Fibonacci retracement. And if this truly is a wave 2 style pullback, price should respect that level. That's the latest update on SUI. If you found this analysis helpful, please hit the like button, leave a comment, and subscribe for more regular market updates. And if you really enjoy the content, consider checking out the channel membership for additional insights. You can also join us on X for extra charts, updates, and market commentary. Links are available in the comments. Thanks so much for watching, and I'll see you in the next update.